What is going on, everyone, and welcome back to Explain the Charts. Today, we are looking at Litecoin, or LTCUSD, which is presenting one of the most conflicting and interesting setups we've seen in a while. The news is a battle between extreme bullishness and extreme fear. We have headlines talking about an imminent spot ETF approval being a done deal, with analysts targeting prices from $275 all the way to $400 and beyond. Yet, at the same time, we're seeing reports on a brutal 23% price plunge, with some suggesting another 20% drop to $76 could be incoming. This clash of narratives is creating massive volatility and uncertainty in the market. The primary driver for the bullish sentiment is, without a doubt, the anticipation of a spot Litecoin ETF. Bloomberg analysts and prediction markets are giving it a near-certain chance of approval by the end of 2025, despite some recent delays from the SEC, partly attributed to a government shutdown. This ETF is seen as a major catalyst that could unlock significant institutional buying pressure. However, the market just delivered a brutal reality check with a massive crash just 2 days ago. AMB Crypto reports the plunge erased recent gains and happened amidst a broader market downturn, yet trader activity and volume surged, suggesting a battle is being fought. So, is this a final, violent shakeout before a massive move up, or is it the beginning of a much deeper correction? Let's dive into the charts to see what the price action is telling us. Looking at the daily chart, we can see the broader context of Litecoin's price action over the past year and a half. For a long time, it was stuck in a wide consolidation range, mostly between the $60s and the low hundreds of dollars. However, starting in November 2024, we saw a significant breakout, pushing the price into a clear uptrend. This move culminated in a peak just above $140 in early December, and then again testing the high $130s recently. This $130 to $140 area has clearly established itself as a major long-term resistance zone. Now, let's zoom in on the most recent and dramatic price action. You can see the run-up throughout September, which lines up perfectly with the increasing hype around the October rally and the ETF deadlines. Price climbed steadily from around $110 to over $125. Then, on October 10th, we have this absolutely catastrophic candle. The price opened at $125.98, rocketed up to a high of $135.99, and then flash crashed all the way down to a low of $54.94. That is a staggering 60% drop from the day's high to its low, an absolutely brutal liquidation event. The day closed at $97.07, a 23% loss, but the wick tells the real story of the volatility. This move completely shattered the previous support levels around $118 and $105. To really understand the anatomy of this crash, let's switch to the 15-minute chart for October 10th. For the first half of the day, the price was consolidating healthily above $125, even pushing towards the highs. Everything looked fine until around 2050 Universal Time Coordinated, where we see the first major leg down from $127 to about $122. But the real collapse began at 2105 Universal Time Coordinated. In a single 15-minute candle, the price plummeted from $122 down to $81. In the very next candle, it continued its free fall, hitting the ultimate low of $54.94. The speed and violence of this drop indicate it was likely driven by a cascade of liquidations and stop losses being triggered. What's just as interesting is the immediate aftermath. Buyers stepped in aggressively at those lows, pushing the price all the way back up to over $100 within just 15 minutes of hitting the bottom. This shows that despite the panic, there was significant demand at those lower levels, scooping up what they perceived as a massive discount. Now let's switch to the 1-hour chart to analyze the price action following the crash. After the initial V-shaped recovery off the lows, the price has been attempting to stabilize. We saw a bounce that topped out just under $103 on October 11th before pulling back. Currently, the price is trading around $93.56. This forms a very clear short-term range we need to watch. Immediate resistance is now at the psychological $100 level and, more significantly, at the bounce high around $103. If bulls can't reclaim this $100 to $103 zone, it signals weakness. On the downside, the low from October 11th around $87.66 is the first key support level. A break below that would open the door for a retest of the lower price targets mentioned in the news, such as $76. The volume has been decreasing since the crash, which is typical of a consolidation period. The market is essentially holding its breath, waiting for the next major catalyst or piece of news. So, let's pull back to the daily chart and recap what we're looking at, both short and long term. For the bulls, the narrative is simple. The crash was a manufactured shakeout to liquidate leverage before the inevitable ETF approval. They are looking at the huge buying pressure that created the long lower wick on October 10th's candle as a sign of strength. A bullish scenario would involve reclaiming the $103 to $105 level first. A confirmed break and hold above that would target the old support-turned resistance around $118. If the ETF is approved, a swift move to retest the major resistance at $130 to $140 is almost a given. Beyond that, as some analysts suggest, a parabolic move toward $200 or $275 could be on the cards. For the bears, the chart has suffered significant technical damage. The breakdown from the uptrend is clear, and the price is now trading below key levels that were previously support. A bearish scenario involves a rejection from this current $95 to $100 area. Failure to reclaim these levels would likely lead to a test of the $87 support. If that fails, the next logical target would be the $76 level some analysts have pointed out. The ultimate bearish target would be a retest of the crash low around $55. To summarize, here are the key price levels to watch. Major resistance is at $130 to $140, with smaller hurdles at $103 and $118. Immediate support is at $87.66, with lower targets at $76 and the absolute low of $55. So, what are my predictions? Given the strong consensus around the ETF, I believe a bullish outcome is more probable, let's say a 60% likelihood. The crash, while brutal, looks like a capitulation event that often precedes a reversal, assuming the fundamental catalyst, the ETF, materializes. A period of consolidation between $90 to $105 is likely until we get a definitive answer from the SEC. I'd place a 30% chance on a continued sideways or downward drift towards $76 if ETF uncertainty persists or if the broader market turns sour. Finally, there's a 10% chance of a catastrophic failure, like an outright ETF rejection, which would send us to retest the $55 lows and possibly lower. The key thing to watch for is the SEC's next move regarding the Canary Capital and other spotlight coin ETF filings. Any news, positive or negative, will likely trigger the next major move. That's our analysis for today. Thank you for watching Explain the Charts. Please remember, this is not financial advice. The crypto market is extremely volatile, and you should always do your own research before making any investment decisions. Trade safe, and we'll see you in the next video.